The broadcast is now starting. All attendees are in listen-only mode.
Good morning, good afternoon, everyone around the world. How's everyone is doing this beautiful Friday, November the 1st of 2024? I hope that everyone is doing great. Everybody know, my name is Eric Morera. I was the founder and the leader analyst in Elliott Way Forecast. So today, as we do from time to time, we're gonna do what we call a free seminar. In Elliott Way Forecast, we do a lot of seminars every single day to members. Good afternoon, John. Yes, indeed, I did. So what we're gonna do today is we're gonna present about an hour presentation in which we're gonna relate the U.S. elections to the market, and we're gonna trying to prove it is true that a party is better for the economic war than the other, of if it really affect the stock market as many think, right? So it's gonna be interesting. Good morning, good afternoon, Eduardo. It's gonna be interesting. As always, I'm gonna try my best there to. I'm gonna try my best to provide you guys with as much information as I can, so everyone is able to understand our point of view, right? When it comes when it comes to the market, we cannot email this. No, it's a big of the fire. What you guys need to know when the recording is ready, it's gonna be posted on our homepage in Elliott Way Forecast. With that, you guys gonna be able to you guys going to be able to see our view, the recording there. So let's allow one more minute for everyone to join us, and we're gonna start the presentation. As everybody see there, the name of the seminar is The Market and the U.S. Election. Does it really matter? And I really hope that by the end, you guys will be able to have an idea about the U.S. election and about many points when it comes to these fundamentals, events, and relationship with the market, right? So let's see how it goes. We're going to start in about 30 seconds. And first of all, thanks for everyone to be here. A lot of traders here today, some members and some that they are non members. Hello, Martin. Hello, everyone there. So the format is going to be very simple. We got an instructor to follow, and uh, good evening, good afternoon. Henry is sleeping now, Mohammed. So good afternoon, everyone. So like I say, the format is going to be, I will share the screen in a few. The format is going to be very simple. I'm going to be doing my presentation, and for time to time, I hope you guys understand there is hundreds and hundreds of traders there. So for time to time, I'm going to allow you guys to ask questions, right? For time to time, I'm going to allow you guys to ask questions about what we are presenting. And then that's how we're going to move forward. The thing is that if allow you guys if allow you guys to keep asking questions, we lose the flow of the presentation. So that would be the format. Eventually, you guys gonna be able to ask questions when I'm giving you guys a the opportunity to ask the questions. Like I say, it's gonna take about an hour, and my goal, my goal is that you guys are able to come out of the presentation with a very, very good understanding of our point of view or what we are looking across the market and how we seeing the market, right? So you guys gonna enjoy it. I hope that you guys are gonna be able to enjoy it right there at the end, and you guys can drop your own conclusion, right? That's the goal. That's the goal. That's the goal here, right? At the end. All right. So let me share the screen with you guys there. Are you guys able to see? Are you guys able to see the screen, right? Everyone? Okay, fantastic. So welcome all to another seminar from Elliott Wafercast. Today is November the 1st, 24. My name is Eric. And the name of the seminar is The Market and the U.S. Elections. Does it really matter? Does it really matter? Right? That's the name. So, like I say, we're going to follow an instructor on the seminar, right? We're going to follow an instructor on the seminar. And, and the structure is, this is what we're going to be covering today, right? We're going to cover a major, very light. We're going to go over the Elliott Wave degrees, the Elliott Wave structures in a little bit so you guys know because I want you guys to understand when we have an impulse, when we have a correction. We're going to present the chart in which we're going to highlight the presidential terms and the S&P. And you guys going to see how the market react in each presidential, right? It's because, as everybody knows, here in the U.S., there are two major political parties. There is the Republican and the Democratic Party, and it's the understanding for the people in general that the Republicans are better for the economics. As a full disclaimer, I am a Republican, right? I got the way and why I think this way is okay. It's a free war, but I don't have any bias on this. We're gonna show the market reaction after each presidential election, and then we're gonna get in a little bit into forecasting this future cycle. It's not about Tuesday. It's about the future cycle, how the market should behave into whoever is elected a new president in next week sometime. You cannot say John anymore on the 5th because nowadays it takes a week or at least 4 to 5 days to be able to select a president. So that's the idea of the seminar, right? Any questions so far? We just started, Ram. Any questions so far? Good, right? So let's start it. You're welcome. This is overall, guys. I don't want to explain anyway. I'm just gonna give you a heads out so you guys understand. There are different cycles in Elliott Wave that goes from the grand super cycle to the sun minus right here. And the idea is to represent in a chart the competition of 5 waves in any of the degrees, right? That's the key. Understanding that each cycle goes from wave 1 to wave 5 and then do a correction. Wave 1 to wave 5 and then do a correction. I hope you guys understand the idea. It's not about explaining and understand it that the grand super cycle is a century cycle that lasts years and centuries, and it's gonna be there, and it's gonna do corrections for time to times and keep going. And then the lesser is the more time frames, right? Like if you go to the some minutes, you can say that that's the 30 minutes, 5 minutes time frame, even sometimes an hour. And then there is less and less that it goes to milliseconds. That's how Elliott wave works. It's a flutter that goes from 1, 2, 3, 4, 5, and when this wave 5 ends, it goes to this degree. When this wave 5 ends, it goes to these degrees, and on and on and on, right? That's the idea there. This is how it looks overall. Overall, it looks like a 1, 2, 3, 4, 5 in any degrees. When it finish, that's when it is upward, this is downward, right? When it finish, what happened? We're gonna see a correction in 3 ways. And corrections comes in different ways, but that's the idea. Sometimes you got a one out of the 3 main imports is always extended. Sometimes you got the first one, the first way extension. The third way extension is the more common. In commodities, you get the first. In indices, usually is the 3, the third way extension. And sometimes in commodities and some indices, you can get a wave 5 extension. And that is how the market works. Overall, it runs in sequences that goes 1, 2, 3, 4, 5. If it does a 7, then it goes a 9. In that case, it's a wave 3 extension. 1, 2, 3, 4, 5, 6, 7, 8, and 9. So it's a very, we look at Elliott wave and we do apply Elliott wave in a different way than most people, right? In a different way than most. We apply Elliott wave in the most up to the dates way, because usually that's what the textbook or the book or the discovered by Mr. Elliott is say that that's how the market, the flutter that the market works. But that was in 1930s, and like I always say, every time that I have a chance, we are in 2024. We are in 2024, right? And because we are in 2024, we do need to understand one thing, that being in 2024, we have to look at things differently. And then we apply a lot of new concepts to the way that we use the theory. But like I say, overall, the main idea is that the market move in sequence of 5 and correct in 3. The sequences can get complex. For example, this is the third way extension. And if you count the way, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. And some of you guys, some of you guys might have seen us through social media talking about 3, 7, and 11, 5, 9, 13. Those are the sequences that the market works, that we need to understand it. We need to understand it. We need to understand it in order to be successful in this profession, because most of the times people use the theory in one way only and get caught in the wrong side. For example, most of you guys, when you guys see 1, 2, 3, 4, 5, you guys gonna start selling the market. Don't you guys agree? And that's why one of the main reasons that many traders are bearish the S&P, because they find the ways to find 5 ways and they're selling the index. And they are not using the theory like in 2024, right? They keep saying that after 5 comes 3, they don't count the swings, they force the buyers and they end up losing. We have applied a lot of new things like the sequencing, like the swing counts, like the market correlations, using of the RSI that allow us to understand where we're going across the market, right? So that's the extension of wave 3. In corrections can also be seen, right? Usually the correction happens in wave 2s or wave 4s or in wave B or of the market, right? And usually the corrections comes in sequences. Let me show them. Like the more popular one of the correction is the ABC, right? The more popular one is the ABC, which is a simple 5-3-1 correction like this. For example, this is an ABC, 1, 2, 3, 4, 5, 3, and 5. When sometimes the market is weak or the trend is weak, then the ABC can become a WXY, right? The ABC can become a WXY, and this is an ABC after 5. And like I said, sometimes it can become a WXY and the market can be doing this. WXY, this is a more complex, but they do ABC, 3 back, and then another ABC. Something like this also is what I'm referring. ABC 3, the trend is weak, and then it does 3 backs, ABC, and it goes here. So overall, guys, that's what you guys need to know there. That's what is needed to know there in order to understand what I'm going to explain in the future, right? Any questions so far about the market degrees and the Elliott wave overall extensions? Any question? Any question so far? Does everyone understand more or less the 1, 2, 3, 4, 5, the corrections in the 4, or ABC or WXY, right? It's clear. Everyone understand also the following, that the Elliott wave theory, it was developed in the 1930s. We are in 2024. I know that there are books about the theory, but the books, most of the things that they do is, I haven't read ever a book about Elliott wave myself. I just read the main, the early page of the books, in which they give you the basis, the major rules of the Elliott wave theory. They stay all this topic, but the market had changed, and now the market is more computer driven. More people use computers nowadays to trade. There is the high frequency trading computers that they are very precise in entering and exiting the market. So in Elliott wave forecast, we have added a lot of new things to the theory. So that's what I want you guys to understand. We look the market different than most traders, because we look the market like we're trading in 2024. So having explained that and everyone being able to understand the basis, let's move on to the following page. Everybody knows there is 2 major political parties in the US. There haven't been a president that doesn't belong to one of the 2 major parties, either Republican or Democratic Party. So these charts that you guys see there is all the, we went as far as the data and these quarterly charts allow. It was it's a reflection of the presidencies, how each president, the market performed in relationship with them, right? It gone from Carter to Reagan to George Bush, father, to W. Bush to Clinton to W. Bush, Kia, the son, then Obama, Trump, and Biden. And if looking at the data, I want you guys first and everything to look at the time of the George W. Bush president. This time right here, right? As you see, that's the only president with a negative gain on the S&P. And I want to ask you guys now, does anyone have an idea why that happens? Anyone has an idea why that happens? Yes or no? Anyone? I like to interact with you guys. Does anyone have an idea? Yeah, it was the the real estate crisis. I understand it, but no fundamental idea. I'm talking about why he was negative. Why he was negative. There is a technical reason why he was negative. All right. For the answers that I see, I like the answer of Brian. Brian say because it was a wave 2. Benjamin nailed the answer. It was the wave 2 within the grand super cycle. Right? So out of everyone there that have answered, only 2 person I agree. There is no triangle there, Eduardo. It was a flat. Yes, it was a flat. No a triangle. Yeah. Only 2 person have provide the right answer. It was a correction within the grand super cycle. Remember that. It was a correction within the grand super cycle. That's why he's the only one that really got a negative gain. Mr. Bush son, the Bush son, I think it was 40, 43, 42, Bush 42, I believe. So it was the only one with a negative gain. Now, if you notice, after Bush ended here, Obama in 2 terms gained 1420, right? Obama, he gained 1420. Trump, in 1 term, he passed Obama 1420 and he did 1547. And Biden, in 1 term, he passed Trump and so far it has an end. There is 2 more months to go, a month and a half to go. It has 1910. So when you look at this, the Biden president is the more successful president for the S&P. Everyone, if you look at this, it's the most successful, is the president in which the market has gained the most, right? Now, I don't know how many of you guys there, I don't know how many of you guys there live in the US. I do live in the US. And I can tell you, if you look at Biden president, it doesn't feel like a good economic. I know a fundamental guy. I know a political guy. I don't have a bias there. I'm a Republican, like I say. But, for example, It doesn't matter. It doesn't matter. It's if it's measured in percent of gains, it doesn't matter. It's just to give you an optical, Eric, right? So, ideally, everyone is guilty in a way of the war, right? That we live. And for example, Biden, Biden started here. COVID already passed. We might say that Mr. Trump, if it wasn't because COVID, for those who follow fundamentals, it would have ended higher. And we can say that Mr. Bush, if it wasn't because he started his presidencies at the beginning, at the beginning of a grand super cycle showing there 5 weeks, a grand super cycle there showing 5 weeks, he's guilty of being labeled like the only president we get negative net, which in reality, yeah, there was a war, but in reality, it doesn't matter who the president is. It doesn't matter who the president is. At the end of the day, when I look at this, when I analyze this chart right here, my conclusion is that it's a matter of timing. And I guarantee you here that in 2008, McCain was elected president instead of Obama, the market would have rallied. Why? Because there was already 3 weeks put back. So the same way, I want you guys to understand that point of view, which is that no matter who political party is in power, in relationship with the performing of the S&P and the indices, right? Because the data don't lie. Don't you agree, Brian, Eric? The data don't lie, everyone. The data don't lie. So the data show, and for me, when I look at this chart, I see two things. One, I see, let me put the charts live here. I see two things. That this part over here, it was due that we have 5 weeks within the grand super cycle that it ended here, right? You can make the point before Trump, and we should say that the Democratic presidents have a better performance in the market. When you see Clinton with 900 and Obama with 1422, but Trump break those two. So it tell me that it doesn't matter, right? So is the president performance is in relationship which in which cycle does the market is when the president take the power or take the presidencies, right? So in reality, I don't know if you guys agree with me, the data proved to me two things. That Bush was negative because 5 weeks ended in the S&P within the grand super cycle, and that we have the biggest correction in the market in the grand super cycle started in 2000. And there was something else against Bush besides that in 2000, and now let me show you the chart of the S&P. The wave one within the grand super cycle ended in any Elliott wave count. This one is super bullish, Brian. This one here is less bullish. But in either case, this is the correction of the century, of the right there. That's the correction, that the grand super cycle correction. Everyone follow me? That it was guilty of that. So the market did over here 3 weeks, and the market rally again. The market did 3 weeks and rally again. When that happens, something else happened in the market. We got the Hang Seng right here, and this is the Hang Seng and the S&P on the bottom. The S&P after 3 weeks here, it was ready to rally, but the Hang Seng outrun everyone and reached the blue boxes selling areas. The Hang Seng put back, and the correction in the Hang Seng after reaching the grand super cycle, it collects, it creates the C wave or the irregular flat in the S&P. And that way, that kill Bush president and make him the only net negative president in the U.S. history when it comes to the S&P. Everyone see my point, because if it wasn't because of the Hang Seng, his president have started here, it would have been positive. But the Hang Seng reaching the E collects from the all-time cycle, it has to put back and create the correction as an irregular and give the S&P more time to correct 8 years within the grand super cycle. So it's obvious. It's obvious that the market doesn't follow the precedents. It's obvious that the market trade based in technicals, and it goes from blue boxes to blue boxes. Those blue boxes are the high frequency trading. I'm going to show you something else about the S&P. Allow me a few seconds, and I'm going to show you to you guys. For example, this is the S&P entering 2020, right? And entering 2020, this is the chart that we provide to the S&P for members. This was in April 2020. Honestly, we didn't knew about COVID. Who's gonna know in April of 2019 that there's gonna be something that is called COVID? Eventually, we were telling the members that the S&P should be topping around. This is the SPY, right? SPY. It's the same. It should be topping between around 340, which is 3,400 in the S&P, and it would be bottom all the way to around 240. We were able to see the corrections coming, entering COVID. And when you look at the real chart right here, the S&P peak over here around, we say 340, it peaked at 33.98, very close, right? And the S&P declined at 21.89, we say 220, But the message is about cycles. It's about the sequences of 5. It's about the sequences of 5s and how react no matter who the president is. Everyone with me? No matter how react, no matter who the president is. So to move forward here, we have each presidencies right here and how much they have advanced in the terms. Obama, it was 2 terms. It did a plus net of 1420. Trump, it was 120. Very good performance by Trump, 1547. Biden in 110, look, 1910. 1910 and Biden, very good. And then I want to ask you guys, what do you think? What do you think? What do you think? What do you think that that this is the reason why? This is the reason that this is the reason. There is no a political reason. There is no a political reason in relationship or how the S&P will perform. There is no a political reason here, right? Why the market advanced more in Biden. I live in the state. No, it's not about that, Francis. I live in the States. And no question that COVID create a recession across the world. The manufacturing chain, it was destroyed at that moment. Of course, that inflation needs to increase with whoever the next. I guarantee you that if Mr. Trump was the president now, there was a period of impression. Yeah, a Republican can maybe print less money in a way, I don't know. But the way I look at it at the data, the way I look at it at the charts, for me is very simple. No matter who the president is, right? No matter who the president is in the market it will perform doing whatever the market wants. No base if it is a Republican or if it is a Democratic president. Now, everyone got the point about Bush 3 weeks pullback, right? Everyone. Why Bush was negative. Now, I want to ask you guys something. I want you guys to look at the angle from here up to here. We can say that this is a 45 degree, right? All the way here. 45 degrees all the way here, correct? Eduardo, Brian, Eric, all you guys there, Francis, it's a 45 degrees here, correct? In other words, we can say that from here, this is like a 45 degrees all the way here. We can say that this is like a 60 and change 7 degree. And we can say that with Biden is getting closer to vertical. And in other way, there is something that wave 3 of 3 is, Francis, when the market get real vertical, right? Wave 3 of 3 is when the market get real vertical. And looking at the chart, I can say Biden is got the benefit of maybe entering wave 3 of 3 in the market, or being within wave 3 of 3 in the market. Trump got the benefit of the beginning of wave 3 in the market, because if you look at this count in the S&P, yeah, this is wave 3, wave 1, or wave 3 of the red wave 3. So this is wave 1 or wave 3, wave 1 or wave 3, sorry, wave 1 or wave 3 or wave 3. And this is wave 1 or wave 3 or wave 3 or wave 3. And maybe that's Biden, with all the recession that we have in the first 3 years of his president, we can see that Biden has overperformed everyone. Now, I'm going to ask you guys. Now that I explain it, does it make sense to you guys? What I am saying? How I've been able to make the difference between that the president do not matter. And sometimes, like Obama, he got very lucky. Sometimes, like Bush, he got a bad luck. That's the way it is sometimes. That's the way it is sometimes in life. Be on the right place at the right moment. Right? Yes, AG. Yes. I don't see your last scenario. I don't see it. I don't see in my charts nothing showing to 3,000. So the way I see it is that that's my conclusion from this chart. No matter who's the president, the market is gonna perform based in the Elliott way structures. Sometimes some presidents got lucky, like Obama, like Trump, even more Biden, because Trump, there wasn't no too many economic issues. And Biden's, we got the coming out of COVID with a global recession. In other words, I mean inflation, put it that way, not recession, inflation, in which everything is skyrocket. Everything that you're gonna buy is skyrocket. Rent is skyrocket and everything, right? That's what Biden got. But still the market overperformed. Why? Because he's entering a wave three, right? Everyone, I don't want to get into the future yet, Francis. I will get there in the few. So the way I see it is looking at the wave count of the S&P. Personally, I don't like this count. Personally, I don't like that count. And this count, the reason why I don't like it, for example, this is the zero line. This is zero. This is your wave one. Your wave three is not the shortest, right? But if you look at momentum, there is divergency there, but this count is not supported by other world indices. It's not supported by other world indices because this count is calling for more upside and a correction again of the grand super cycle, correct? Everyone, that's what count, that what count. I don't think that this is gonna happen. And the reason why is because, yes, if you look at this, it's very linear. Besides, AJ, the look of 1, 2, 3, 4 in blue, and this is the more popular view for you guys to know. I've been a contrarian here saying that this doesn't happen. In Elliott wave theory, I just presented because I know some of you guys know about this count. This is not what we are presenting to members in Elliott wave forecast, right? And Elliott, if you look at the angle right here, that doesn't look like a wave 5. Wave 5, usually the angle start to decreasing compared to the wave 3 peak. That's not the case here. So I don't see this count happening. I see this count as a more realistic count. That Bush got the wave 2 in the grand super cycle. That Trump in the middle got the wave 2 or lesser degree. That Biden right here got the wave 2 of the wave 3. And that the market, it will keep going higher. Either in another nest or because we got here in no separation, the market will do a 3 right here, it will do a 4 right here, right? And then it will keep going higher. I don't use fundamental, Brian. I don't even know those terms, to be honest. I swear for God, I don't. My my way of thinking the market is pure technical. That's the way I see it. So I see more of an outcome this. A beginning of the wave 3 of 3 of 3, or a series of 4 and 5 into the next presidencies. Right? So for me, for me, for me, Eric shouldn't be wave 2. No, wave 2 doesn't need to penetrate wave 1 to be a nest. No, no. Not in my book, it is. So the way I see it is that the market is at a stage that there shouldn't be a huge global crisis. I believe that the market is supported and it will remain supported. And the president that it takes power in January 20 of 2025, it won't be the worst president in the world. I would say this core today is a little bit tricky in the shorter cycles. In the long time cycles, yeah, we can see a correction of this magnitude. The way I see it, I see 1, 2, 3, 4, 5, 6, 7. There are 7 swing higher. The market is trending higher and the market is supported. And discount, not to say 0, I give discount only 1% to happen. And even if we're going to happen, it should see a wave 4 in red and the 5 to follow. So, as I say, the count that we're working is either a super nest with another nest to happen at the beginning of the next president, or it, which is the wave 2 to happen, or a 3 and 4 and continuation happen. I don't see a correction of the grand super cycle. Like I say, and this is for those that in many ways, I don't know why people always speaking. For me, the worst trade a trader can take is a worst trade that the trader can take in the market. In my view, the worst trader that the market can take is selling the indices. I swear I forgot. Or picking tops in the indices. Or picking top in the indices, right? And eventually, they are very bullish. And like I was saying, that Eduardo being in our seminars when we do it, right? Like I say, for example, they are for example, this is let me see over here. Let me see when I have it. 1 second. This is FTSE, which is the index from UK. Everyone here. This is the FTSE, right? And if you took this way, look at the FTSE. Overlap everywhere, right? You look over here, you can see, and you overlay the FTSE together with the S&P, and look, you got the same trend, right? Brian, AJ, Eduardo, Francis, all you guys there, Eric, everyone. It's the same trend. correct? It is the same trend in the FTSE. Yes or no? What is the difference? That the S&P is lagging the FTSE, is more contracted. But as a waiver, that we cover 78 instruments and we track more than 78 instruments in the world, I need to go and say, let me look around and I make me decide if it is discount or if it is discount. But then when I look at the FTSE, what do I have? A FTSE, it has a very nice advance from here, a flat correction here, and the beginning of the wave 3. But this overlap here. So this cannot be my wave 3 in the FTSE. It has to be a S, 1, 2, 1, 2. And now the beginning of wave 5 or wave 3. So proving this, what do you guys like as a count between the crash or the super advance in the market? What do you guys like after I explained this? Bounce, no crash. Exactly. So the next president of the United States is going to get benefit possible or the biggest advance ever seen by the U.S. president in one term. But let's not run before we work. It cannot be a leading diagonal. It cannot be a leading diagonal because the third swing here is in 5 weeks, Mohammed. So the next president, if we are entering the super nest, he might, by the end of the first term in 2028, has a biggest advance in one term of Biden, Trump, and everyone else. If he's elected 2 term, if it's Kamala and she can be elected 2 term, Trump only 1, then if it's 2 term, it's gonna be tremendous, right? If it's 2 term, it can be, but wave 3 cannot be overlapping. That's what you need to learn. He keeps saying that the FTSE can be I don't know, Francia, but he keeps saying that the FTSE can be a 535 diagonal. Agree. A diagonal can be 535, but these fives, they are a diagonal themselves. And a diagonal cannot be a wave 3 even within the diagonal. You follow me? That's the point. So for me, the next president, if the market is going to do 3-4 in red and black, which is possible that the market does 3-4 in black, my target is 61.72 for this cycle to end. If the market does 3-4, the next president is going to see a little bit choppiness in wave 4, right? A little bit choppiness in wave 4, and then an advance. If it is a nest, a super nest, it would do choppiness at the beginning, like Biden, and then an advance. I would say the next president is going to be most likely a net winner when it comes to the S&P advance across the market. The S&P advance and the indices across the markets. How do I measure wave 3? Is this lead related to wave 2 right here? This is the minimum distance. If it's the wave 3 in black, it can extend. This is the measuring for the nest, right? It can extend onto 78.33. So I want you guys to follow what I just did. I discounted discount already. Ain't gonna happen. 1% not to say 0. then I debate between this one, the blue nest, or 3 and 4 in black. Either way, the next president of the United States is going to be a net winner because you don't see a correction that takes a year, right? And I don't see a correction that it takes 4 years. It can be a year and a half correction, but not 4 years at least. Now, we need to zoom in now to this cycle, because at the end, my goal is to tell you how the market should perform with the US election and the possible avenues. This is the cycle that started on October 2022. And this is an instrument right here that we've been tracking in Elliott wave forecast very nicely. This instrument is CAT, C-A-T. And if you look at it from 2022, how many waves do you guys see over here? 1, 2, 3, 4, 5, 6, 7. Correct, AJ? 7 swing. Right? So this is telling you one thing. The US election is on Tuesday. The resort can start a pullback like this that retest kind of that trend line. That can be on the car in the next coming week. Or the market will do a marginal new high and pull back. At the beginning, I don't see too much advance in the indices with the resort. In previous years, the market we have nailed. You know what nail mean? Being perfect with the US elections. For example, this is the Dow Jones in 2020. Dow Jones in 2020. 3 weeks put back to the blue box. And the market, this is when the election was. At that stage, our members were long already, and they took all the rally. Right? That's in 2020. Look, the market rally with Biden as a president. If everyone that lives in the States, you should be hearing everyone that if Kamala get president, the market is going to crash. In 2020, we were saying, yes or no, the US guys, that if Trump didn't get elected, the market is going to crash. That's what we say in 2020. But we as a human, we got short memories. And the reality, the idea is that it didn't deposit. And the reason why it rallied with Biden is because it's going to rally, but then no matter who the president was, because already did 3 weeks put back to the correction area. This is the Dow Jones in 2016. Trump got elected. I remember that today, the first reaction in the market, and this is when I want you guys to listen to me very careful. A WXY structure, I have it here. A WXY structure, 1, 2, 3, 4, 5, is a 7 swing structure. You never sell the indices, AJ. You never sell the indices. 1, 2, 3, 4, 5, 6, 7. Right? One, 2, 3, 4, 5, 6, 7. If you look at the Dow over here, don't you guys see the following? 1, 2, 3, 4, 5, 6, 6 over here, my bad. 6, Everyone sees seats right there, right? 1, 2, 3, 4, 5, 6, and 7. So when the election happened, the market was here. It was due a swing number 7. You see that, AJ? Everyone? Because he had to do 7. And we were waiting here to buy at the blue box area from there. Blue boxes, but those that doesn't know, is areas, high frequency areas, in which the market always reach and react into the right side of the market. So in 2016 was very technical right there. Now, this is the S&P. One second. This is the S&P on 2016. Again, 1, 2, 3, 4, 5, 6, 7. Bingo. You reach the blue box and started to react. Trump got elected and the market rallied. The same way, Biden got elected and the market rallied out of the blue box. Now, this is 2016, the Dow. I already explained it. This is 2020, the Dow. Look, 1, 2, 3, blue box, a beginning of a new cycle. No matter who the president was, is going to rally. So 2016, 2020, we got the market already into a correction mode and ready to renew the outtrend. Everyone see it, right? Dow 2020, Dow 2020, Dow here 2016. In 2016, it wasn't ready. That's why it declined in the after the election day into the box. It wasn't ready. This is daily corrections. And now, this chart right here show, one second, the cycle in question is right here. This is the cycle in question, this cycle. We are not in a correction yet, right? Everyone see it. We are not into a correction yet. Or if we are at the early stage. That's what I say. 2024 is different than the 2 previous elections. It's completely different. Why? Because we are not into a correction. And when we look at the market and we look at CAD, I say, this is the weekly bar in CAD. I'm going to downgrade it a little bit to the daily. How many waves do you see, guys, from this cycle to this cycle? 5 or 3? How many do you guys see? To be honest with you, I agree with Pedro and AJ. In a stretch, to be perfect, I would say 3. Then the market will rally with the US election and the market will sell. Or if I want to force it and I apply channels, I can say that this is my wave 5. So entering Tuesday, the market is a little bit questionable, not as clear. I mean, for the event on the day of the election. Remember, now, for example, Florida, when I leave, you get the resort by 11 p.m., 10 p.m. Pennsylvania, it's going to take until Friday, Thursday. Wisconsin, the same. Michigan, the same. So we will know the president until Friday or Saturday, most likely. And the way I see it, personally, I see if the cycle wave 3 ended here, the market will sell with the resort. If otherwise, it will make a marginal new high, react, and then lower. Something like it did in 2000, over here in 2016. React and then sell. Right? That's the way I see the market, honestly. Because when I look at the history right here of the S&P, the yellow dots are the US elections in the S&P. This is 2016, like I say, we were at the Ecolex, right here, perfect. I keep saying to you, we do not sell the S&P. I will never gonna sell the S&P, AJ. So this is 2016. In 2012, it was also in another 100% extension right here. If you look at it, which 1 second. In 2012, it was here. And I want you guys to get the difference. 2012, bear with me, 2012, we were into the correction already, right, AJ? 2016, we were into a correction on election night, 2020, the same. Now, today, we are now into a correction. This is the S&P. Yeah, I can call it completed if I want to. I can call 5 ways there. Then the S&P can come and sell before rallying. Other path that I see is that it rally and sell. And another path that I see is that it sell and extend within wave 5. But everyone is going to come out to a correction in the next few months, a beginning of a correction in the next month or so, unless it becomes an extended wave 5, which is a possibility. Now, we get back, we are now into a correction compared to 2020, 2016, 2012. 2008, the market was due a series of 4 and 5 to finish the big correction. And I hope you guys understand, 2018 and 2012, a Democratic president, now correction, yes. 2012, a Democratic president was elected. 2020, the same, the market rally. 2008, it was here, the market sell before rally, because it wasn't ready to finish 5 ways from here. You came back 2004 with Bush, the market was already here. It was 3 ways pulled back and rally, ready to rally. It was in a correction. 2020, it was the beginning of the grand super cycle, and it was at 3 ways, but from the lows right here, right? It was in 3 ways from the lows. That's what I saw. Very technical. 2016, it was coming out of the 96. It was coming out the correction. So this year is very unique overall due to the stage of the market that we are now already in a correction. So our view is that the market, in my view, the market is gonna do one of the followers, right? Everyone understand, yes or no, that because of CAD, right here, because of CAD, the cycle from 2022 is not completed. Everyone understand that, right? The cycle from 22 is not completed. Everybody understand that, right? So whoever the next president is, yeah, he might get at the beginning, it might get at the beginning right there. It might get at the beginning right there a pullback either in this way or a marginal. It's kind of borderline. A marginal, something like this is gonna happen. The most bullish I get at this stage, guys, is that the market create an extended wave 5, then the market put back and rally. It's one of those three. It's open. I mean, I hate, if you guys notice, Elliott Wave Forecast is probably the only service in the world that don't use alternative views, that we don't use alternative views. Probably the only service in the world that we don't use alternative views. I hate when I have to present alternative views. Right? I hate it. But today, I can say it's no very clear. There will be a selling before the end of the year. That's almost sure. It can start with the US. The US can spike higher and lower or extend a little bit into 105, 205, 3, 4, and 505 to finish wave 3 here. It's not like previous election that we always reach the election night with a clear indication of where we are. Right? So, for me, it's very clear. The market is super bullish. The market is going to continue higher. The next president is going to benefit of the super bullish state of the market. The next president going to see at the beginning of a cycle a correction in the next 2 years. It's going to be a correction. Either a wave 4 in black, like 2022 Biden did, or a wave 2 in blue. And then if it's a wave 2 in blue, the next president is going to be the president in which the S&P rallied the most in the history of the index. Right? In the history of the index. Now, everyone understand my point long term, right? Now, that correction won't happen until the end of this year or beginning of 2025. Most likely beginning of 2025. In the first quarter, we might get is when we might see CAP ending this cycle. The wave 3 in CAP and the wave 4 to start. But for now, the next 3 months, we might see a correction. So the next president is gonna see choppiness in the first 2 years. Why? Because there is no Elliott wave view that put the market into a wave 3. It's a continuation of wave 4 and 5 with the biggest degree wave 4 or a nest in the market. Shorter cycles, like I say, the way I see it is described here, and it's gonna make either starting wave 4 in blue, right here, starting wave 4 in blue like it's there, or it makes a marginal high and then sell again, or extended, already did 3 waves from here, extended into wave 5 and red before pullback. It's not a good market entering the US election. Why? Because they clearly 5 waves from here, clearly, and possible 5 waves from here. When you see 5, it shouldn't be the most extension. And that's my take into Tuesday. That's my take into Tuesday. right? In which the market is going to get choppy. Now, getting back to discount here, there is the debate. Is it wave 4 or is it wave 3? Is it wave 4 or is it wave 2? Is it wave 1 or is it wave 3? And you can answer your questions through, for example, the dollar. The dollar has been sideways here. It did what it looks to be 5 weeks up to here or up to here, and it's been sideways. But the beginning of this cycle is September 22. The beginning of this cycle is September 22. And I'm going to ask you, what does CAD has to do with the dollar? If you ask any trader, right, that's one of the possibilities. If you ask any trader, what does the S&P or CAD has to do with the US dollar, I guarantee you that not many can find a correlation. Right? Look. Right? Yeah, the Dow Jones looks like it ended August the 5th. You follow me? The Dow Jones looks like ended August the 5th. If you look at the Dow on the current data right here, right? If you look at the Dow here on the current data, this is August the 5th, right? It looks like it ended August the 5th. So, but it's still above August the 5th. August the 5th is the line in this right here. So the Dow at this stage is only 2 possibilities. It's either here and extend the wave 5 before lower, or a reaction and start lower before higher again. Right? The Dow do not support the possibility of new highs. Others, yes, because you are at the early stage if you are into the correction. So I was saying that the correlation between CAD and the dollar is clean, right? It's clear. Right? It's clear there. The correlation is clear, right, Eduardo? Francis, everyone. Higher CAD, lower dollar. So the dollar now is sideways. It can be a triangle like A, B, C, A, A, B, C. The dollar can continue triangle. But as far as this one needs to, this is CAD, right? CAD. As far as CAD needs to extend one more time, you should assume that the dollar will extend one more time. And what does the CAD is going to do after? CAD is going to put back. And the dollar is going to rally. You already have the Singapore dollar at an equal X from 2020, or showing 5 weeks from 2020. Right there. So next year, what we're going to see, that the market is going to put back because the dollar needs to rally and the Singapore dollar needs to rally. So when the dollar rally, indices don't rally. That's the way it is, 99% of the time. So the correction in the dollar, the magnitude of the correction in the dollar right here next year, it will determine if this is a wave 2 or a wave 4. And that's the seminar, guys. That's what I'm trying to explain to you guys. That's what I want you guys to understand, how we see the market in a very technical way, how we see the market. Yes, we are in front of a different type of Elliott wave structure today compared to the two previous elections, right? Right now, we are in market ending possible a 4-hour cycle from August the 5th or a daily cycle from October the 23rd, an incomplete bullet cycle weekly from September 22. So the takeaways are very simple. The most significant economics advance in the market, that should be the case more or less. Benjamin, I don't know if you are a member of Elliott Wave Forecast or no. If you are not, I invite you to take the trial. I think they have a promotion or something. I don't know. Or it's just $9.99. Take the trials and you can ask the question, more specific questions inside the members area. But yes, it's going to be a correction sometimes next year, if that answers your question. And the most significant advance, wave 3, has been on the Biden, considering he's been a president only for one term. The gap from this opening day onto October 31st to 24, it has been 1910, right? And he has outperforming all the president, even all the president in one term. Trump is the second one, second to Biden, in advance in the S&P in one term. And there has been only one negative president, W. Bush. Why? Because it was the end of the grand super cycle correction that finished 500 points negative. The two-term president, Clinton and Obama, performing very well. They are Democratic Party. Trump is Republican. And Trump did good, better than these two, and 210 did Trump. And Biden is Democratic president, and he did better than Trump. So in the critical thinking element, it doesn't matter which party is in power. The expansion or the wave 3 in 2092 made Clinton, Obama, Trump, and Biden close to about a 100-point line during the president, which is a lot. Against Bush was the only president, and in 2 terms. And the reason that it's stringent and the reason why it's happening is because of the Ham saying reach the selling area. And before 92, only Reagan has the most significant advance, which was a Republican. Conclusion, doesn't matter which party you are, right? Conclusion, doesn't matter which party you are. I have covered the market reaction after each presidential election, the September 22 cycle, and indices in CAD, which is incomplete, which is telling me that before we correct that cycle, the market should continue higher in a series of 4 and 5. The daily cycle in the Singapore dollar to prove that the dollar should be bouncing next year and correct the cycle from 2020 or 2022. And we have proved to you guys, and we have shown the future path, which is shown right here in the chart, and the one that is shown that is one of these possibilities. I would say either one ends with a sell-off in 4 hours into another buying opportunity. Honestly, I hope that today we were over here like we were on July 22nd. I will be saying no matter who the president is, the market will be rallying. Sorry, like we were right here, my bad. Like we were right here. I will be saying the market will be rallying no matter who's elected, because the market is coming out of the equal legs. Like Obama was calling in 2008, he was entering the equal legs. If you notice here, Obama the Ecolex was at 798. And if you look back here, when Obama, it was in this chart. If you look back in this chart, November 5th or 3rd, 2008, look, the market was right here around 1930. At the Ecolex there was 798. So it was clear there that the market soared to reach for the buyers, for the smart buyers right there waiting at 798, right? But today, November the 1st, the market, it is no and neither of one stage, and the market honestly can take, it can see, it's gonna see selling either. It's gonna see selling either against this peak, in this is the Dow, but let's put the S&P. Let's downgrade the S&P. I think the market sell after all. Not on the first reaction. It might be on the first reaction, but the market sell after all. This is the wave for November 4 right here. And sorry, August the 5th. For me, the market short cycle, if this is the way forward from here, the market is gonna do this, sell into a way forward. Or if we hold these lows, the market will most likely rally. It can rally and then sell. And the extension is, this is a way forward for you guys to know. And then the extension is that this is a wave 1, this is a wave 2, and the market does perform a little bit into a 3 and a 4, and the market sell. I see the selling, AJ, or the correction to start very soon. I see more a correction than a rally overall, ending 2023, 24. So I hope you guys honestly enjoy the seminar, and you guys are able to see how we look at the market. The pullback next year, it might take a quarter or two. If you look as a reference, Benjamin, right there, 2022, it took from January onto October. So it took technically, it took at least almost 3 quarters there, right? So I hope you guys really enjoy it. As always, we are a business. We're doing this for free. If you guys, these are the instruments that we cover. We cover a lot of stocks. 78, most of the indices around the world. You can join the trial. You can go enjoy the trial right there, right? I wish, but I'm very busy, AJ. I'll be honest with you. I recommend that you guys take the trial, so just $9.99. If you want to be covered, exactly, Michael. If you want to be covered entering the U.S. election, I recommend that you guys, after this presentation, guys, listen, a hamburger today costs more than $9.99, right? So why not say, okay, I got the U.S. election next week. Why don't take in the trial here? You go, you take the trial. It's 14 days. Now it's $9.99 still, 99 cents, guys. But you're gonna be covered on Tuesday and the next week. So it's something that it will help you guys tremendously. Take the trial, see how we work. And if you like it, you stay. That's the bottom line. All right, guys. Thank you all for being here. A lot of people here today. See you guys around. Thank you guys all.